Okay, I had an idea here for making the Fibonacci pivot zone easier to work with, and I'll show you what that idea is. Okay, so let's say you're watching the 15-minute chart and you see this nice reversal here, this nice uptrend, and you're looking for an interesting candle to measure the Fibonacci levels on against. And let's say you see this hammer, and the idea behind a hammer, again, always is that um, price got pushed down, like the sellers took control here, but only for a very brief moment, right? And then the buyers pushed it right back up again. And in the case of a green hammer like this, they actually closed it above where that candle started. So, very aggressive area here for buying. People are very interested in buying right there, probably because this particular price section here was so strong. This big elephant candle, and this one too, for that matter. But basically, people saying, hey, this is a lot of strong buying, and this is this zone here. So when price dips back into it, we're going to buy it right back up again. Okay, and so the same would hold true for the next candle. People saw that this was a very aggressive buying area. So when price dipped down into it, people are like 50% off. I'm right there. I love paying half price for stuff. And that's basically the thinking, right? I mean, if people loved this price zone and bought it right back up again, then that means there's a lot of value there, right? And so if the next group of people who are looking at trading it see it come and it's half off, they get a half price, then that's gonna be attractive to them, right? So that's the idea behind the 50% retracement. It's 50% off. It's a sale that where price the cost of something is half off, and that's basically the psychology. Because remember, this is an auction type market. The price or the goods go to the highest bidder. So people are trying to get it as low as they can, but when the price comes into a discount area, then everyone's going to rush for that, and then it's like first come first served. So that's the idea behind getting stuff at the 50% retracement level. Why that's such a powerful level to trade off is that when people see something for half price, they want it, especially if they think they're getting a great deal. Okay, so keep that in mind when you're thinking about why 50%. Why are we using 50%? Now, in order to make the Fibonacci a little bit easier to work with, there's something that you can do. Let's say, again, you see this candle, you think it's interesting, and you're wondering in your mind, I wonder if people are going to rush in to buy that when that candle is discounted by 50%. And so you can put your Fibonacci level on here, and if you double click it, at least on TradingView, I don't know about Ninja, and you want it just to be a little bit less noisy and is more succinct, more direct in terms of what you're looking for, you can go ahead and uncheck all the boxes except for the upper and lower end of the zone and the 50% level. So I'm going to uncheck all these sections, right? And that's only going to leave the pivot zone, as I like to call it, the lower end, the upper half, and the dead middle, which is 50%. So then, when you're coming into your close-up view in your 5-second chart, you're looking for those heavily nuanced things you're looking for. For example, you're looking to see, does price touch the 50% or not? Yes, it did one time. Does the color change from red to green? Yes, it does. Does it use dojis to show a balance of power here, a balance of buyers and sellers before it changes green? Yes, it does. Does the and then et cetera. You've got all this stuff you're looking at down here with the fast cross on the MACD and it hitting the zero line, showing a lot of strength when it gets there. You don't always have to wait for the zero line. I mean, you can get it halfway between the fast cross and the zero line. That's a good spot to get in also. Some people just buy as soon as it starts to curl. That's kind of up to individual preferences. The more you wait, the more confirmation you're going to have, but also the higher price you're going to pay for it. But the point of this video is that now I've taken off all those other levels. Now you don't have the extensions or anything like that, but you've got the zone itself. And so if that helps you kind of narrow things down and say, okay, I am now in the zone. I don't have to try to look and read 61.8, 38.2. That's all that's up there is the upper and lower end of the zone and the middle of the zone, which is a dark green line, at least on TradingView. I don't know what they look like on Ninja. But anyway, that's an idea, just like going into the settings and unchecking all those areas so that all you're going to see is the actual pivot zone, not the much lower end of it, not the much higher end of it, not the extensions. So that's something to think about if you want to make it, if you really want to simplify this, which when you're new, I think simplifying is better. Simpler is better, right? Because, you know, there's just less things you have to remember. And so if you just want to uncheck those and leave your pivot zone only on there with the 50% level, then that's, you know, something that you might want to think about doing. Okay, that's it.